Ever wondered how the stock market works? It's not as complicated as you might think. Today, we'll unravel the mystery behind the stock market and break it down into simple, bite-sized pieces. First off, let's start with the basics. What is a stock market? Well, imagine it as a giant global marketplace where shares of publicly traded companies are bought, sold, and traded. These shares, also known as stocks, represent a piece of ownership in a company. When you buy a stock, you're essentially buying a small piece of that company. Now, why would anyone want to buy stocks? The answer is simple: to make money. Investors buy stocks with the hope that the company will grow and the price of their stocks will increase. When that happens, they can sell their stocks for a profit. This is known as capital gains. But that's not the only way to make money from stocks. Some companies also pay out a portion of their profits to their shareholders in the form of dividends. So how are the prices of stocks determined? It all boils down to supply and demand. If a lot of people want to buy a stock, the price goes up. If many people want to sell a stock, the price goes down. This is influenced by various factors such as the company's financial health, economic conditions, and market sentiment. Stocks are traded on exchanges, which are essentially platforms where buyers and sellers meet. The most well-known exchanges include the New York Stock Exchange and the NASDAQ. These exchanges ensure that the trading process is fair and transparent. An important player in the stock market is the broker. These are individuals or firms that are licensed to buy and sell stocks on behalf of investors. They act as the middleman between the buyer and the seller. Now, it's essential to understand that investing in the stock market involves risks. The value of stocks can go up and down, sometimes quite dramatically. This is why it's important to do your research and consider your risk tolerance before investing. So, to sum it up, the stock market is a platform where shares of publicly traded companies are bought and sold. Investors make money through capital gains and dividends. The prices of stocks are determined by supply and demand and are influenced by various factors. Brokers facilitate the buying and selling of stocks, and investing in the stock market involves risks. Remember, the stock market isn't a get-rich-quick scheme. It's a tool for building wealth over the long term. It's about buying pieces of businesses, watching them grow, and reaping the benefits along the way. So there you have it. A simple breakdown of the stock market. It's a fascinating world, filled with opportunities for those who are willing to learn and take calculated risks. With knowledge and patience, you too can navigate the stock market with confidence. Happy investing!